Dale Briscoe, welcome back. How are you?
I'm good, Dale. Can you hear me?
Yeah, loud and clear.
Perfect. Well, another
So,
good show
wow.
from you guys. Yeah, wow, wow. A
I
lot
mean,
to talk about today.
from when we were talking, it turned out to be kind of ironic. You came in here worried about me being too bearish on the Mag 7,
Yes,
and you had that beautiful bull flag.
I did.
And
That's a
and
very good
I
memory there.
ended up being worried about you.
Well,
Anyway, I,
there's good and bad, right? So
yeah,
as I keep telling people, having been in the business for 35 odd years now, and having done tens of thousands of trades, statistically, I'm only right about 62% of the time. So you have to let
we're
me off the odd mistake.
okay. I'm wondering if you're going to share some
Yes,
charts.
I am.
You know, if you flipped, if you just got flat and waited for the panic at 4,800, and where you're at now,
Uh,
S&P wise.
S&P wise, yeah, sure. Can you see my
Or
screen?
yeah, we have a couple of oscillators here.
Yeah,
United States real GDP.
yeah, cool.
Okay,
So, let me go through a few things and then I'll
okay.
sort of get into a little bit more detail. So, no, I haven't flipped. The view is the same as before, but things have become a little bit more murky in terms of there's less clarity now. And I think, Powell was going on about that last night. And this all stems back to what's going on in the White House, right? We didn't really have the full inkling of what he was going to do with tariffs last time I was on. Clearly now he's playing hardball, although I think markets are telling him, he's being completely stupid. And I was listening to a couple of other podcasts, and just generally speaking, I think the world is confused by what he's doing. And it's a strange way to treat friends, economies that have been friendly towards the US over decades, if not centuries. It's a very strange way to behave, and it's almost like an isolationist policy that he's adopting. And I do worry about what the longer run outcome of all this is going to be. Not, not.
Where some of us are having a hard time hearing you, Dale.
Sorry, can you hear me now?
Yeah, thank you.
Sorry. So yeah, it's all a little bit confusing, and I don't think that's going to clear anytime in the next few months. I mean, I hope it does, but I think this could be a longer term issue. But anyway, let's dig into it. So the Fed is in rate cutting mode. They didn't do anything last night, but I think their bias is towards easing. The spanner in the works, of course, is tariffs, and I think it's going to take another several months for that to become clearer. So I don't think the Fed are going to do anything at the next meeting either, because I don't think there'll be any more clarity by then, unless data drops off a cliff, right? If data drops off a cliff or there's some kind of market hiatus, then I think the Fed will be forced to act. But
Okay,
in terms,
do you think that 4,800 level panic low is it? A lot of people calling it that was four,
yeah,
so we completed it, and now we're in five to the upside.
yeah, I think there's a good possibility of that. I think I'd say it's probably 75 to 80% probable. But let's come on to it. So anyway,
Okay,
GDP is okay, but it's softening a little bit. So this is what the Fed is looking at. Unemployment rate is gradually creeping up, and there's nothing to worry about at the moment, I don't think, but it's giving the Fed some more ammunition. Average hourly earnings stable, maybe coming down a little bit. Leading indicators are okay, right around 100. Uh, and retail sales, are okay, maybe ticking up a little bit. But consumer sentiment has fallen off a cliff. And just don't forget, this is all coinciding with what's gone on in the last few months since Trump took office, right? This is basically since the end of the year. And on the flip side, inflation expectations have gone through the roof. So you've got consumer sentiment falling dramatically, but inflation expectations going much higher. And this is a real issue for the Fed, a huge issue for the Fed, right? Because it catches them between a rock and a hard place, and they don't know which way to jump right now. And that's why Powell and the Fed are a little bit in the headlines. It's going to take a little bit more time, things to play out, any on whether they or whether they actually need to be raising rates significantly.
Yeah, you're breaking up now, Dale.
Sorry.
Yeah, it's all right. I mean, just letting you know.
I could switch microphones, but maybe I'll just.
All right, I could, I think if you just maybe concentrate on not being how you normally talk, just talk loud, yell at us. All
Yell at
right,
you.
so yeah, so okay, this is a
Okay,
10-year
so
yield. This is
yeah,
interesting. I
yeah.
like this. All right,
So this is my view on the 10-year yield, and I
okay,
think you know my view a long time. We
yeah,
are said this now since 2020. We are in a generational bull market for
right,
inflation and yields.
right.
We've broken a 40-year trend. So it would not surprise me at all that if over the next several years uh, we trade at least 6%, if not 7 or 8% on 10-year yields. People think I'm crazy because the US cannot afford that on the debt, but this is what the charts are saying to me. And I've got us in a big fourth wave triangle, and we have yet to complete the final sort of dance around that. And that could take us another couple of months, right?
So does
Uh,
that take us back, take us back to what, about 450?
about 470.
470. Okay, so just under five.
Yeah,
All right.
470. And then back towards 4% again,
Yeah.
and
And then
then
look out.
way
Yeah.
above 5 in the second half of the
Yeah.
year. That's what I have right now.
I like that
And
look.
yeah, thanks. And then this is German yields, right? This is the German 10-year
Yeah.
yields. And again, it's the same picture. It's a 40-year
Yeah.
trend,
It's
downtrend, and it's
the interest
broken
rate trend is global, right?
in the major economies.
Yeah.
So I've got yields going higher. But the
Okay.
interesting thing for me is the dollar. So if I zoom out a little bit here,
Oh,
this is
I'm
my
so
big,
glad you came with this count because it's something I've been asking myself and traders. Like we had that first break that you had labeled 3 with a question mark,
yeah,
and down to A was about 1,400 handles. And
yeah,
then from your blue B, 1,400 handles gets you about 96.
yeah,
And you
exactly.
think this could be a 4 as
Yeah,
well. So that would be like ABC for 4, and then you have a huge bull market in the dollar.
yes, that's what I'm thinking.
And I could see this playing out. I know we have another low to make in the dollar, but have you looked at how bearish positioning is? The most bearish positioning is on the dollar in many years.
Yep. No, I
That's going
think
to
it's
be good fuel.
I think it's very interesting. I think it's very interesting. It's a nice confluence here.
Yeah,
Uh, you've got this,
96,
you've got
30.
this, you've got this uptrend from
Yeah,
2011. You've
yeah,
got
I
basically a
like that.
38% retracement, comes in at about 98, 99. You've got the
Right.
channel, you've got the A equals C coming in at 96, all within the
Okay.
next week or two. Now,
Yeah.
it, we could have another low, right? We could have another low in the
Oh,
dollar.
yeah, I think we will.
And I think that's what people are generally looking for. But what if? What if we don't?
Yeah, that's possible too. Well, I'd say getting back over 102 would prove that.
Yeah, I think probably what I think I would say, yeah, 103. If we get back above 10, 102, 103, I would say
Yeah.
we're on our way.
Yeah.
So this to me is a very interesting chart because I think people
What
are,
kind of economic environment are we going to have with the dollar bottom? Because we're much closer, if this count plays out, to being a buyer than playing the bear side of the dollar anymore, even if there is another 300 points or so in the dollar to the downside. But what kind of environment do you see, Dale, for other asset classes if we're going to have the dollar trade? What was your upside objective for five? Did you have one?
oh, it's significantly higher, 121.
Okay, what do we have? A massive deflation, the opposite of what everyone's talking about now?
Uh, no, actually, interestingly, I think that we're going to get inflation. I mean,
Okay,
that's my core view.
okay. Higher rates, higher prices,
Yeah,
and and with a strong dollar. Hmm,
yeah.
okay.
So
Well, that would take the sting out of higher prices in a way, wouldn't it?
nominal prices will be going much higher, but obviously real prices
Right,
will be subject to inflation.
right. Okay.
So
Let's look.
so yeah, thank you. Um, so there, coming back to your equity question, I think the reason why I'm only 75 to 80% confident that we're going to go higher is that there are still some mixed pictures, but I'll come on to why I think my bias is still favoring upside. This is the momentum factor ETF, right? Um, and these are the Momo stocks, so all the usual suspects. And it's dropped substantially in the last, whatever it is, 5, 6 months. And you could almost count this as a five-wave decline. If you're looking at it, you could almost count it as a five-wave decline. There's a slight tiny overlap there, but that looks like a pretty clean five waves down to me. Now, if that's the case, and we're coming into resistance now back at the 61.8, and that's what I always look for is a
Yeah,
return to sort of 50, 60%. If we then roll over, that could be a whole world of hurt on the downside again. If we can get back above, I would say 160, 165 maybe, then I think we're on our way back again and we'll see new highs. But that gives me cause for concern.
so are these stocks in this
Yeah,
ETF?
yes,
And
yes,
what? It's a
exactly.
Mag 7?
It's not Mag 7, but it is big momentum
Okay.
stocks.
All right. Yeah, they've
The
been
other,
weaker than the S&P.
yeah, exactly. Um,
Yeah,
this is another thing that gives me a cause for concern. This is the
yeah,
stocks, right? Semiconductors.
yeah.
You could argue, that that's a head and shoulders top, right?
Yeah, you could.
Yeah, between these two blue dotted lines, that's a head and shoulders top in there. And if so, we've basically broken the neckline. We're coming back up to retest the neckline from underneath, and then we're, again, whole world of hurt on the downside potentially. So
Back
so
to
those are
the 22 lows is what you're
yeah,
targeting.
exactly. You could drop another 30, 40% from here, right? But
Yeah.
I don't think that's the case. And the reason why I don't think that's the case, and the reason why I'm somewhat biased, still 80% to the upside, is liquidity. This is the this is the Fed's balance sheet. And people tell me that I can't chart economic indicators. Well, I would beg to differ. This is the Fed's balance sheet, sort of post 2020, right? It just ballooned from about 3 trillion up to about 9 trillion. And we're now, taking a little bit back each month, and we're back down to 6 trillion something. But to me, it just looks like a five-wave Elliott wave structure on the upside. And now we're just giving back,
Yeah,
30, 40,
correcting.
50%. And if you look at the
Oof.
RSI, we're diverging.
Yeah.
And the other thing that makes me think that this is going to end and the Fed's balance sheet's going to increase again is when I start looking at money supply. Money supply to me looks like it's reached a bottom and it's now headed higher again. So when you think about the central bank and you think about money supply, and also the fact that, there's credit spreads are nowhere near what they were in 2020. and they're nowhere near what they were in the global financial crisis. They're
Yeah.
very, 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 very muted. So for me, these sorts of things are signaling that I think risk on is still the way to be. And just to look at a couple of other charts, this is your S&P, right? This is
Yeah.
quite a pretty chart, right?
It
From
is. I love. Yeah. You ought to make
2020 lows.
NFTs out of these two.
Yeah, that would be nice, wouldn't it? I think the
Yeah.
market for NFTs is long gone, Dale, sadly.
Oh,
But
well, we'll do it for a hobby.
we could have made a lot of money. Could have made a lot of money had we done it 2 years ago. But anyway, uh, this is
See
quite
how
a pretty.
on top of it I am?
Yeah, you are. This is a pretty chart, right? Because you've got the third wave is equal to the first wave. You're still inside the channel. You had a nice touch point. You came back to touch the top of wave one. So this potentially is a wave four bottom,
Yeah.
and there's only three waves down from the top of this.
Yeah.
It's unlike the momentum ETF. There's three waves
Right.
down. Now,
Yeah.
the clear line in the sand for me is about 57.80. We get above 57.80, then I think that even if we then have a pullback, which is what I'm actually looking for, I think over the next few months, we're going to be making new highs. All right. And the reason why I say would
Okay.
do a pullback is we're coming back into the midpoint of the channel. I think, momentum wise, we're beginning to run out of steam a little bit here. I'd like to see another couple of small highs towards this sort of, as I said, 57 and a half, 57.80 level, and then have a pullback. So do something like this. Oh, let me just grab my drawing tool. Do
What do you
that,
think
and
of
then maybe
what do you
back
think of
and then
this?
higher.
Um, like you showed the momentum one was five down. This is C. This was three.
Yep.
So if we have ABC, which is 5,800, if it's equality from the low to the first high, and then from 5,100, 58 is equality. Couldn't that be a B wave? Call the three down A,
Yeah.
call
Could be.
this rally B, and then we get a C that maybe cleans out 4,800, goes to like 45 or so, and then
Yeah.
we
On
turn.
this, in my view of the world, if we get that, then I think this whole structure is not what we think it is, in which case you're likely to have a much bigger correction. I mean,
Okay.
substantially bigger, sort of, maybe back to 4,000 or maybe even 3.5. I don't
Okay.
see that right
That's the
now.
end of the bull market then.
It's the end of this leg of the bull market. I mean, don't
Yeah.
forget, if we look in very long-term time frames,
It's
the
always a bull
market's
market.
it's always a bull market. 70% of the time, historically, the market is
Yeah.
is up. So, but no, I hear what you're saying. So instead of what I'm thinking, which is, that you might actually you're suggesting that we've got an A down, a B up, and then a C down, right? And
Yeah.
then that. Yeah,
Yeah.
that's possible, but I don't like that. I think what's more palatable to me, at least anyway, is to have something like this and develop some kind of triangle and then higher, right?
I know
But
some of the bulls are looking for 7,500. They have a Elliott count up there. If that's four down
yeah.
there, they're looking
Mhm.
for over 7,000.
Yeah. I wouldn't disagree with that. I mean, we can do a couple of quick measurements on here
Could
if you
that
like.
be over by August?
No, I think that's too soon.
It's going to take more time into next year to
Certainly
achieve that.
later in the year, I would say is probably when we're likely to see it.
Okay.
Um,
Let me ask you about,
so yeah, 72, 70 maybe.
okay, last time you were here, you liked the oil over um, the oil shares over precious metals, which of course the precious metals exploded. So did the shares. But I'm talking
Yeah,
about now. How about now? I'm sure that it got even more out of whack
yeah,
of oil being very undervalued to gold, just like silver is with the gold silver ratio over 100.
Yeah, let me come on to that in a second because it's a really good observation. Let me just reinforce why I think that the market is
Okay.
potentially not as bad as people think it is.
Okay.
Not only do you have the S&P with this kind of picture where you come back to basically test the top of the sport of the breakout from 22, you have it in the financials as well. So here's the broker dealers, they've done exactly
Yeah.
the same thing, right?
Yeah.
And financials, XLF, it's done
Yeah.
exactly the same thing. So when I see financials doing okay, and
Yeah.
there's no
Financial stress.
there's no financial stress. What we were talking about. We were talking about the credit spreads, right? There's no real. I don't see that there's any real stresses in the system. Yes, we had a shakeout.
Yeah.
I think that was primarily leveraged money. And I don't know if you saw it, I actually wrote a small piece
On
on
that basis trade, Dale?
no, not on the basis trade. It was
Uh,
basically on LinkedIn about a month ago on Friday, April the 4th. I remember it very well. I wrote a piece saying vol is spiking. The VIX is probably going to get to 60, and that will provide a great opportunity for long-term investors to go and buy risk assets, not leveraged investors, but long only guys. So pension funds, charities. I'm a
yeah. Yeah.
trustee. I'm a trustee of a big charity here in the UK, and those are the sorts of moments when you want to be taking advantage of that. So I don't see the stresses in the system, and that's why the
Well,
financials
that's a
look
shot across the bow anyway.
yeah,
You
it's
can't
a shot.
completely discount it because when you look at that compared to, and look left,
Yes,
that's a change, and it's not back at the low levels. Maybe it will
it's
end up back near the lows, but
it's not. And
that to me
you're talking
looked
about the VIX, right?
what you
You're
were
talking about
showing
the VIX.
before. I don't know
Oh,
the
oh,
chart before
the credit
the
spreads.
credit spread. Yeah. See, so I mean, it snapped back the velocity of it. Um, you know, says that something its character has changed. It seems like to me.
Listen. Spreads back down to about 360.
Okay.
If we get above 450,
Yeah.
then I think there's every chance we go to six. This is on spreads,
Okay.
and if that's the
Because
case,
this could be
yeah,
a two in the spread here.
it could be. It could be.
I'm just being Phil Donahue. He every time he'd always be say the opposite of his guess. He was the devil's advocate. So now you know who I work for.
Yeah, being non-American, that reference is sort of over the top of my
I
head a little
know.
bit.
Yeah, but I'm sure you have them over there too. Talk
Uh,
show hosts.
no.
Yeah. No? Okay.
Oh, no, not him. Not him.
Oh,
We
not
we
him.
have
Yeah.
talk show hosts. I don't watch
Yeah.
that sort of garbage on TV, to be
Yeah.
honest.
Okay.
Anyway, these are a couple of other things that, yeah, I know. I'm very outspoken. I'm sorry about that. This is another reason why I think that the market should do okay. You remember we were talking about the stocks, and I was saying, this could be a head and shoulders, and that would be
Yeah.
bad.
Yeah.
When I look at SMH relative to other things, so
Yeah.
semis
That
relative
looks more
to
like a flag.
XLK tech, it looks more like a
Yeah.
flag, right? Same with when it
Yeah.
relative to SPY. It's done what all the other big things have done, which is come back to test its breakout level. So not that not that concerned. And the other thing is, look, here's commodities, right? This is the CRB. This is CRB going back to 2020, and we're up 200 and odd percent, right? And we haven't given much of it back.
No,
Over
it's just been sideways.
the last 2 years, we've basically been sideways. What that says
Yeah.
to me is inflation is not going to go away. There's
No.
still liquidity in the system, and I think we're headed higher on risk assets. So
Yeah.
that's bullish,
A
right?
lot higher.
It's
Should have
bullish.
equality to oh, okay,
There's your cocoa.
there's your there's going to be a third drive up there, the new hive. I
Yeah,
see one,
or wave
two,
five.
three. Yeah.
Yeah, wave five. So that's Coke. These are my two favorite drinks, cocoa and coffee. Uh,
You ever
uh,
mix them?
no. But I
You ever
sometimes
chase
I,
hot cocoa?
sometimes have alcohol in them. Um,
You're great,
look,
Dale. Go ahead, buddy.
You know my favorite charts, right? Here's
Yeah.
Bitcoin.
Oh, yeah, yeah.
Bitcoin had a big shakeout, but all it's done is come back to test
Yeah.
its breakout. I
So
think we're
where's
going,
5N? 125?
we could be going a lot higher. I mean,
200?
I used to be a Bitcoin agnostic, right? I used to be agnostic in terms of Bitcoin, but
Yeah.
as the whole inflation landscape has changed in the last 4 or 5 years, and
Yeah.
I think inflation's going much higher, you
Yeah.
have to be owning assets that are going to give you some kind of uh,
Hedge against it?
not it's not even a hedge, it's just exposure to. You just want an
Yeah.
exposure to something that can potentially inflate, and Bitcoin is it. Or one of the things, right? So I think it could go much higher. Where's it going? Who knows?
So it'd just be five starting. Yeah.
Yeah, it could go significantly higher. I
So
mean,
new
I see
high
people. So new
150?
highs on Bitcoin, at
Yeah.
least, I would say.
Yeah. Yeah.
Um, Here's gold, my other favorite. Um, I actually bought some of this overnight. I'm really happy with it. We had a nice pullback.
Yeah.
For
That was
me,
a nice one.
it's still an
May
uptrend.
not be done either. What if that was B up there yesterday?
Uh,
What if the
it,
high was
it,
five? What
it,
if the
it,
high
it,
was five of them? And
yeah,
now we're in a big four.
it could be. I think the demarcation point is 3,200.
Okay.
I think below 3,200, and you might need to
We're going to
reconsider.
your lower dotted line.
We've just been to the lower dotted line. We've just been to the lower dotted line. I think we do
Fast.
something. I think we just do
Fast.
something. I think we just do something like this.
If you're right about, and you know what? Blake was saying, Blake's not here right now, but he was saying, or someone was saying, what's a bear case in gold for it to get to 2,700? Well, Dale, it could be that dollar rally that you had up on the screen for a little while. I know
It
they
could.
could both go up together,
It could be.
but they could also reattach
It could
as
be.
well.
It
Dollar could pressure it.
it could well be. It could be a much stronger dollar doing that, but I don't think that kicks in probably for a number of months yet, maybe a number of quarters. And you know how commodities behave, certainly in fifth waves in commodities, they are usually exponential in their moves, and you have blow-offs, which is
Okay,
why, you know, I'm targeting
37.
37.50, 750, and I think there's
Yeah,
every chance that we get there.
yeah. I
Why
know some
not?
people are. Yeah, could.
And so if that's the case, this is the ETF of
Well, let me ask you
gold
this as
gold
a con.
juniors. It is massively bullish, massively. If you take out 67, 68, I think you can easily go to 80, 90, 100 over the next year or two. You could double in gold miners.
Yeah, they look good.
And uranium is my other sort of inflation trade as well, right?
Yeah, yeah.
This
CCJ
is
is kind of the
CCJ, yeah,
best of breed.
CCJ, Paladin, UEC.
Yeah.
There's a whole bunch of
Do you like
uranium
the
miners there.
royalties? Do you like UROY? Do you like royalties in
I,
uranium?
I I haven't looked at it to be honest.
Okay.
Let me just.
It really hasn't been participating. There it is, UROY. Uh, with and it looks like it could have one more dip. I'm a buyer at 120 if it happens. So anyway,
Yeah, I've not followed it for a while. I've not followed
okay.
it for a while.
All right.
But yeah, so that's kind of where I'm at
All right.
in sort of macro views. Do you have any other sort of questions or things you
Yeah,
want to talk
the
about?
last one was about oil against gold,
Oil,
that
oil against gold.
spread.
Yeah, 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 yeah.
Because Dale, do you like oil? No, I can't find a bull anywhere in the universe.
I think
I
we're
think
still
we're
gonna.
bottoming right here.
I think we're gonna need it for years to come. This is pulled back further than I thought it would,
Yeah.
and we took out. This was the break point for me on that trade was
All
right
right.
here. Whoops.
So you'd probably leave it alone.
Uh, I think you need to get back above 205 on this ratio,
Okay.
which is, quite a way away. And at the moment, the
Yeah.
way gold's performing, I don't see
Yeah.
that happening anytime
Yeah.
soon.
How about
But
oil on its own instead of comparing it to the strongest asset in the universe? I mean, what's going to
I,
look good
I,
against
I,
gold?
I
Uh,
thought that was the strongest asset in the universe. I thought those were royalties on your guitar playing, Dale, but I could be wrong. Um,
so there it is.
there
What
it
do you
is.
think? It's a
Well,
breakdown, right? It broke down under 64 or 2 and tried to get back.
yeah, honestly, I don't see it much. I cannot see a world in which oil goes much below 50 unless we have another exogenous event, right? I just don't see it. I mean, ignore this spike low. Maybe I should use the secondary futures.
See, back then you were looking for a big move. Maybe we're going to have it from here.
Yeah,
See how
maybe.
you had that 5 wave coming out there? You thought maybe the beginning of 2024. Maybe
It's
it's
a
going to
cleaner,
happen now.
it's a cleaner
Oh,
chart.
you erased it.
It's a cleaner chart if we use the
Okay.
secondary futures because
It's
we
all
have the
right. I
code
mean,
COVID
uh,
stupidity. Look, we've just made a 60. We've just made
yeah.
a. Whoops, I don't know what that is. I've done that the wrong way around. 68%. Yeah. So we've
Yeah.
just made, sorry, a 61.8. That's a fib retracement right there. And I don't see us going much below $50 unless there's some kind of strange event in the world. And what we could have done is we could have just like taken out some weak longs, right,
Yeah.
with this move below here.
You need to
Or
get
we
back above 62 or
yeah,
4 or something.
60, about 65, I would say.
Yeah.
Back above 65. And that could easily happen, right? If we
Yeah.
could have a war in the Middle East, God
Yeah.
forbid. There's so many geopolitical events that can affect oil, but I don't have a strong view at the moment. I think you need to reclaim some ground before you can start getting bullish again.
Let me wrap it with a real cheery question for you, Dale. All
Mhm.
right, so we have a war in Europe with Ukraine and Russia, or call it Eastern Europe. We have a perpetual war in the Middle East with Israel and everyone else. There's theater number 2. And now we're on the verge of the Asian theater opening up with India and Pakistan. In the
Mhm.
olden days, didn't they call that World War?
You, I mean, that is a good philosophical question. And what constitutes a world war? Is it one or two nations against the rest, or is it, the sum of a number of smaller wars around the world?
That's what you had. You had 3 theaters in World
Yeah,
War II. Those
you,
all through
you,
the same theaters of war.
you, you did, but it was the evil of Axis against the greater good, right? And here, I think you've got,
Well, it could end up that way. Look how they're lining up between
maybe,
India and Pakistan and
maybe.
Iran, and I think Russia and China signing all kinds of treaties here in the last
Yeah,
24 hours. So
look,
anyway,
I think you know my view, right? I've said for a few years now, sadly, that I think in within my lifetime, I think there will be some kind of major war, whether that's a civil war, or whether that's, a global conflict. I think it's inevitable, and I think that's a consequence of the political leaders of the world and how the less well off in society are treated. And I think it's only a question of time before people say we've had enough, right?
we already have I mean, the trade war, if it's an embargo, it's an act of war. So I
Well,
mean, it's happening everywhere. Uh, if everyone out there that hears this, I just saw the weirdest interview of God, Paul Tudor Jones on
mhm,
CNBC, and he went to this conference, and he brought up AI and the guys that are developing them. You got to pull that up on CNBC. Paul Tudor Jones talking AI is about a 6-minute clip. And you know, he's not kind of a fringy at all, is he? He calls himself one of the better
No,
risk
he's not at all.
managers in the world. One of the better risk managers. So he doesn't even call himself a trader, he calls himself a risk manager. But check it out. And, you know, it's pretty bizarre. So, Dale, it's always great having you. Thanks for some good looks to look to trade. Not many people present that bullish look for the dollar. Um, Interesting. So, especially being a host, I like to be able to, and a trader, be able to see both sides, both cases, both the bull and the bear case and everything.
I think you have to. I mean,
Yeah,
I think what I would caution is, my views are usually much longer term time frame
yeah,
than the people that you have follow you on your shows.
yeah,
And also, I tend to look at the world in a relative basis. So, just to answer your question at the start of the show, yeah, markets got a bit of a thumping in March and April. And we did also have losses during that period of time in our equity book. But we run long short, so we're not totally naked, and so our losses were not, that bad, and we've had a big bounce back. We're up about 14, 15% in the last 6 weeks. So I think it's fine. I think the world had a bit of a blip, hope due to Mr. Hopefully, we're developing a little bit of resilience to the nonsense that's coming out of the White House. I think that's what markets do. If you look on an optimistic basis, I think markets climb a wall of worry. They become impervious to the nonsense that's going on around them. I think we did have a big shakeout. I think a lot of leverage players probably got hurt quite badly. I think the long only guys can, look at the the spike in vol that we had as a buying opportunity, and many did. And now I think
yeah.
you have to wait for the waters to become a little less murky. I'm cautiously optimistic and say 75, 80% in the camp of we see new highs, but I think there's still, an element of risk out there because we don't know what Trump's going to do next regarding tariffs in the coming months. So I still think there's an element of risk out there. So just be cautious.
Okay,
Don't.
I think this chart displays it. Even if we have a melt up to 7,500, look at where Dale has wave one labeled. So this is you're much closer to the end of the game. That's what fives are about than you are at the beginning of the game. So even if there is a melt up to 7,500, um, that could be the end of the party for quite some time. So, you have to keep that in mind too. And you never know if you're going to get that melt up or not. Just be a good risk manager like Paul Tudor Jones and Dale Briscoe and do the right thing today, and tomorrow will take care of itself. I guarantee that.
I
So,
think risk management in this environment is paramount.
yeah.
That and position sizing, right? Just don't be too aggressive.
So I'll talk to you like July, August, Dale.
Yeah, that'd be good. I'll hopefully have some more clarity on where we're going by then.
Okay. Always feel you ever need anything, feel free to give me you know, uh, send me an email.
I will
Okay,
do.
buddy. So,
Keep up the good work with the show.
all right, thank you, Dale. Dale Briscoe, everybody. Some great looks from Dale. No axe to grind. Just likes to come here and pay it forward. So, that's called wanting to encourage and lift people up. So that's a wrap for me. We'll see everyone tomorrow. It's Friday, right? Okay. TGIF, guys. And don't just count your candlesticks, count your blessings. See everyone tomorrow for TGIF. Thanks again, Dale. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.